Time for business then on France 24. Owen Fairclough here with a bit of a fight back on the markets underway. It makes a change.
We don't say that very often these days, Stuart, but you're right. There's a lot of excitement. I have to say I'm not quite sure why, because of the G7 leaders holding an unprecedented, unscheduled conference call later this Tuesday to discuss this Eurozone crisis. So the markets have improved. With that, and in anticipation of that, those are the European markets there at the opening bell. Remember, the FTSE is closed for that second bank holiday as part of the Diamond Jubilee celebrations in the UK. On the Asian markets, a pretty strong finish by the Nikkei as well, around 1% in the green. There's the numbers there. Even the Shanghai Composite managed to pick itself up after trading in the red for much of the day. Just while we're talking markets as well, I will mention Australia, the central bank there cutting its main lending rate down to 3.75%. Just easing things a little bit. You know, Stuart, that things aren't going very well in the global economy when the Australians have to stimulate their economy. It's one of the great success stories of the last few years, virtually sailed through the 2008 crash and 2009, and has been doing pretty well up until the last 6 months or so. Demand slowing down in Australia, so the government there is trying to stimulate the economy a little bit. Lots of commentators there, including the government, have been spinning this one up, saying it is good news, but I think for the rest of us it's a bit of a bellwether really, and an indication that things aren't going so well around the rest of the world.
OK, you're also talking about Facebook. We saw all those green arrows before, but with Facebook, it's still on the red, isn't it? They're going the other way.
I think this is at least the second time it's happened in the last couple of weeks or so. Facebook shares sliding once again and down to the lowest point since it made that spectacular, or maybe it was an unspectacular IPO last month. You can see there the share price on Wall Street closed down just under $26. Now, that was after an asset management firm put out a paper suggesting that the best price Facebook could hope for is $25. Well, it's trading at around that price right now, so that gave it a dip. The usual concerns that we've heard about with Facebook over the last few months, this asset management firm wondering how Facebook is going to make money in the future.
OK, well, as Owen said a little bit earlier on, leaders of the world's 7 richest countries will teleconference later this Tuesday. Countries like the US and Canada expected to tell European leaders to do more to tackle their crisis. One idea to stem fears of a continental-wide banking collapse is a special union aimed at guaranteeing their deposits. But as ever, politics is being mixed with finance, as Catherine Viette explains.
Europe is teetering on the edge of another banking crisis. Spain has promised to rescue its most ailing lender, Bankia, pledging 19 billion euros, but it's unclear where the funds will come from. In a bid to help dig itself out from a mountain of toxic debt, Spanish officials have called for Europe's new permanent rescue fund to be able to recapitalize banks directly. Under existing rules, such direct payments are impossible. But German officials have ruled that idea out, saying Europe cannot bail out national banks if it has no supervision over them. Now the idea of a Europe-wide banking union is gaining traction.
The Commission in this debate will be for a structured and ambitious approach that may include what we can call a banking union. Some elements of this banking union will be more integrated financial supervision and also more integrated deposit guarantees.
The proposal would allow the takeover of troubled banks and would see banks paying for banks by collecting the equivalent of 1% of deposits from an annual levy. That money would be held in reserve and used in an emergency to prop up a troubled bank with loans or guarantees. It's an idea that Germany has been lukewarm to, as German banks are concerned they'd be on the hook to bail out other European banks. As pressure on the German Chancellor mounts, Angela Merkel called for greater European oversight.
It's absolutely clear, and I've said it often, we need, at least in the Eurozone, more Europe and not less Europe.
France and Italy have already come out in favor of a banking union. It's sure to top the list at the upcoming European Commission meeting.
OK, let's get a little bit more of the day's company news for you now, starting with Spanish oil giant Repsol, which has been given just one seat on the newly assembled board of its former Argentinian subsidiary YPF. YPF held its first shareholder meeting since it was seized by the Argentinian government. Repsol, which now owns just 12%, is demanding $10.5 billion compensation for the expropriation.
Rosneft Gas has emerged as the likely bidder for BP's stake in its Russian venture. That's according to Bloomberg sources. The holding company behind Russia's largest oil firm, Rosneft, is understood to have approached BP to discuss buying its stake in TNK. BP pushing ahead with a sale of its TNK venture despite threats by its partners to block that deal.
And JP Morgan Chase may report a second quarter trading loss of $4.2 billion. That's the thrust of a research note issued by International Strategy and Investment Group. That loss would cut the latest earnings to 65 cents a share, a 30% decline on previous estimates. And the calculation follows JP Morgan's admission last month that it lost $2 billion through its chief investment office.
Next, lots of dire's coming up for you. A dire profit warning for a company in dire straits. Qantas shares, they've sunk to their lowest point for 4 years. The airline is warning its full-year earnings will be virtually zero. It's the latest, I'll add a word, dire setback for a company that until just a few years ago was the envy of the industry.
Turbulence ahead for Qantas Airlines as Australia's flagship carrier reports a 91% drop in earnings. Shares plummeted to an all-time low on Tuesday on the news. The airline expects its pre-tax profit to be between 50 and 100 million Australian dollars, a far cry from last year's 552 million. Qantas blamed the ongoing economic woes in Europe and soaring jet fuel costs for its dismal earnings. In an attempt to shake things up, Qantas plans to split its profitable domestic and loss-making international operations starting next month.
We have taken decisive action to mitigate losses in Qantas International by withdrawing from loss-making routes, reducing capital investment and transforming Qantas Engineering. The introduction of a new Qantas Group structure with dedicated CEOs for Qantas International and Qantas Domestic will bring further rigour to our business.
Qantas's CEO says these moves will help the international business return to profit by 2014. The airline has also been in a bruising battle with its unions over pay and job security. As part of its 5-year restructuring plan announced last year, Qantas has already shed around 1,000 jobs since February.
That's the problem with Qantas at the moment. Owen, thank you very much. Owen here with Business, of course, every day here on France 24. And we've got the very latest news coming up very shortly. Claire Pride will be here right after the break. Do stay tuned if you boss speaking.
Join us in Marseille as we're confronting brain surgery with eyes wide open. We're visiting a hospital that not only wakes up patients, but talks to them in the middle of the operation.
Don't miss Health, Sunday 11:45 a.m. Paris time on France 24.